Hi traders, CJ here. Just thought I would make a video on the current market conditions because for me they're not the best at the moment. I believe it's really hard to see price action, and hopefully this video will help you avoid some mistakes that I've made myself personally as well. And it's really important just to focus on the higher time frames. Got an example on pound yen that I took a trade yesterday, took a loss, and I was focusing on the 15-minute time frame. You can see that this was yesterday's high, and this was yesterday's low, and we were just looking very bullish. We were, creating higher highs, higher lows. We failed to test the high. We came up to this level, we broke back away, and as you can see, I had drawn a ascending trend line. You can see that we had a 1 tap, a 2 tap, and I entered here on the 3rd tap. I had an order set, and you can see that it broke the trend line and knocked me out for a 1% loss, which was really frustrating. But you can then see straight after that we had a huge push to the upside, which obviously as a trader, when you see that, it's really frustrating. But you can see that I got this trade wrong, and someone sent me their bias on pound yen and were looking for shorts, and you can see that we have now come down and came and tested yesterday's low. So why did this happen? Well, it's really important to look at the higher time frames, because just remember, someone can go short on a position and someone can go long on a position, but depending on where your target is, both can be right, whether you're a scalper, an intraday, or a swing trader. But it's really good to use the higher time frames to sort of gauge the overall direction. So obviously if I go on to the daily time frame, you can see that if I just remove all this, you can see we clearly came into a double top. And what have we done once we've come into this region? We've rejected it. So someone that would look at this on the higher time frames would say, okay, right, this is a good position to short the pair from, and price might come back down into this 140 key level perhaps. You might be able to then get a trend line. Price might come down into this region before we then go for another long position. So it's really good to add lots of confluences, whether that be fibs or structure, but you need to use multiple time frames to sort of strengthen your bias, because if I looked at the overall time frame, I would have said, yep, actually it's rejected this level. You can clearly see at the moment it looks like a bearish engulfing on the daily. Appreciate it's only 9:30 in the morning, but you can see it's clearly rejected higher prices. So then when I go down to the 15-minute, I think to myself, why did I even enter this trade? But that's trading. I just was making a short video to hopefully help you that you have to use the multiple time frames, because this is why trend lines, structure, they are only as good as where you plot them, because they can never be 100% accurate. And you can see that even if I had a quite tight stop loss here, 8 pips, but say I even had under this structure here and had double the stop loss, 16 pips, because we'd gone halfway into drawdown, I probably would have closed 50% of my position, because you can see that we've broken the trend line, and we could have quite fallen away from here. But you know, that was just a disguise move. You know, it's a temporary short, and that was just to catch people out. You know, because traders look for the same areas. But as you can see, it was temporary. It pushed to the upside, but you can see overnight we've come down and we've come back down to these lows. So hopefully that video helps. I personally would stick away from the 15-minute time frame unless you are you know, scalping. But I would really start with the highest time frames, the day time frame, then go down to the 4 hours, then the 1 hour, and then go from there. Hope this video helps. Cheers, guys.